And I'm kind of debating, like, do I dive into the weeds a little bit, or is that a good summation and we could just move on from annuities?
No, I think jump into it and we can finish strong with that. That'd be great.
Okay. Well, I guess I would say this. So, annuities traditionally, the way people look at annuities, how we've thought about them since forever, is you simply hand over a chunk of money to an insurance company, and in exchange, they're going to give you a paycheck. And that's just the way it works, right? And if you live long enough, you get into the insurance company's pocketbook. If you die early, well, the insurance company keeps the difference and you've kind of lost out. That's a very dated, old way of thinking about annuities. And I would say that right now, there's probably at least 4 different reasons why maybe an annuity could be a good fit. One of those would be simply, as Trey mentioned, maybe like a bond alternative. Just simply a place where you could park your assets, right? Maybe your IRA, potentially. You can put it into an annuity or a portion of your IRA. Generally, we don't like to see more than 20 or 30% of anyone's total portfolio in an annuity. But you could just use it as a bond replacement. And the reason why it's an effective bond replacement, the annuities that we generally look at, they have no downside risk. In other words, the principal itself is protected. That's never going to go down. And then, for some people, you're not necessarily looking for a bond replacement, but maybe you're somebody who's in that category where you have an income need. There's a gap between your expenses and what your current fixed sources of income, what they provide. So you're looking for something to help fill that gap. And there's annuities that are specifically designed for income. And I'll jump back to the income ones in just a second, but there's also annuities that have a very large or competitive death benefit. It's not a replacement for life insurance, maybe not even exactly an alternative, but maybe they're more geared toward having a really good death benefit. And some people, that's their priority, passing out as much as they can to their children. For others, they pursue annuities because of long-term care planning and long-term care needs that they anticipate. Maybe they don't qualify for a long-term care policy. Maybe they don't qualify for a life insurance hybrid with long-term care features. And for them, they're looking for some other alternative like an annuity. And there's some annuities that are specifically designed for that. So number one, I would say, find out what your goals are, what your objectives are, the assets that you have to work with, and see if an annuity could help meet some of those goals better than some of the traditional investments that most of us are accustomed to in our 60-40 portfolio. But the part that's a little bit confusing is, a lot of the guarantees and bells and whistles, if you will, a lot of times, we refer to them as the riders on the policy. Sometimes people don't understand how those function. So to kind of give you an example, we had someone recently came in and they said, hey, my annuity grows at 7% every single year. And, I didn't have to look at it to know that it didn't grow at 7% every single year. Probably one of the features, like the income value, or maybe the death benefit value, or some other value, that's probably what's growing at a guaranteed 7%. And the problem is, a lot of times they're not explained that way. So folks are thinking, hey, my account's only growing at 7%. This is fantastic. I'm doing really, really well. But we look at the cash value, the actual investment, and it's not performing anything close to that because they have an income annuity that's designed to create an income stream, and only the income value, a separate value, a fictitious value, if you will, if you never use it for income, then that doesn't matter or doesn't affect you in any way at all. So you want to make sure you know how your account functions. The same thing can be true when you hear about a bonus, right? A lot of times annuity companies, they're in the business of getting more clients, right? They're trying to create attractive and appealing, an attractive or appealing proposition to get somebody to say, hey, yeah, I'm going to carve a portion of my retirement savings out and send it to this annuity company. And one of the ways that they entice you is by offering a bonus on the front end. And I would say, just be careful. Is it an actual cash value bonus? Does it actually increase the value of your account? Or does it go towards some other benefit like the income or death benefit value or potentially the long-term care value? And that's all I'd say is, if you have an annuity, number one, get it reviewed, have like a third party, somebody else give you a second opinion on that account. Maybe call the company directly with that person so they know how to ask the correct questions so you know how your specific account functions. And then if you don't have one, just have a second opinion to see how one might fit into your portfolio.